So you're a dividend investor that wants to add a little bit more S&P 500 or S&P 500-ish exposure to your long-term portfolio. And you want to do so by investing into higher yielding income-oriented ETFs that are going to boost your dividend income a lot faster compared to just buying into the SPY. Well, I have good news for you because in this video, we're going to go through 3 different S&P 500 or S&P 500-ish ETFs that basically track the S&P or very close to it, but along with that offer an option overlay strategy in order to earn a ton of income consistently. Now, the 3 names we're going to go through that all do this is XDTE. We're also going to talk about SPYI along with JEPI. We're going to compare and contrast these different ETF strategies, how much income they provide on a weekly or monthly basis, and overall try to figure out which ETF might be best for me or maybe might be best for you. So if you're a dividend investor interested in income, make sure to stick around, drop a like down below, and let's get right into it. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. Now, the first S&P 500 cover call strategy ETF that's very popular as of recently. It's relatively new, but we're talking about XDTE, the S&P 500 0DTE cover call strategy ETF, which is an ETF that utilizes a synthetic cover call strategy that seeks to provide current income on a weekly basis while also providing exposure to the price return of the S&P 500 index. Now, if things were to go perfectly, this ETF almost seems too good to be true. It offers exposure to the S&P 500, which honestly, what investor out there doesn't want more of that? But along with it, it offers current income on a weekly basis. So you don't have to wait around every quarter, every 90 days to get paid, or every month even. With this ETF, you get paid once a week like a paycheck. Now, the way this ETF works, the overview, it says the round till S&P 500 0DTE cover call strategy ETF, XDTE, is the first to utilize 0 days to expiry or 0DTE options on the S&P 500. XDTE seeks to provide overnight exposure to the S&P 500 and generate income each morning by selling out of the money 0DTE calls on the index. XDTE is an actively managed ETF. So this ETF, although it has something similar to the 2 other ETFs we're going to talk about, this ETF is probably the most management intensive. This ETF is selling out of the money 0 days till expiration calls. And like I said, if things go well and if the market plays along, this ETF not only has the ability to trade sideways or up a little bit, but also the ability to earn a ton of income because of the strategy. Now then it says why XDTE, weekly distributions. XDTE seeks to pay weekly distributions out of sold option premium. Also, it says income potential. XDTE seeks to generate income through a cover call strategy on the S&P 500, and lastly, harnesses volatility. XDTE sells 0DTE options on the S&P 500 index and seeks to exploit structural market mispricings. Now, this ETF offers the largest distribution rate or yield compared to all the other ETFs we're going to talk about in this video, which might or might not mean that it's perfect for you specifically, but for certain doesn't necessarily mean that it's a better ETF. Now, based off of the most recent distributions that we've seen, especially over the past few, this ETF is paying a boatload of income to investors. We're talking 18 cents on a weekly, 33 cents on a weekly, upwards to 60 or 64 cents. This ETF over the past few months has paid out several dollars to investors, which is considerable, especially because this ETF costs around $50 per share. Now, I'm not just hyping up this S&P 500 cover call ETF for no reason. I mean, over the past 0.84 years, the ETF has offered almost a 17% total return with dividends being reinvested, or around 20% if you annualize it. So at least so far, again, things can change in the future. This ETF has offered a nice positive green total return and a weekly income to investors, which means it could be the perfect ETF for the income investors out there that want more S&P 500 exposure. The next ETF that offers more S&P 500 exposure, this one is my personal favorite. The NEOS S&P 500 High Income ETF, SPYI, offers a monthly distribution, a 12% more or less distribution rate, and a strategy that I think is honestly almost as close to perfect as perfect. Now, I say this because the strategy of this ETF is to distribute high monthly income generated from investing in the S&P 500, the constituents of it, and implementing a data-driven call option strategy. So very similar to a lot of other covered call style ETFs, but this is where it's a little bit different. It says number 2, actively managed by NEOS, the fund seeks to take advantage of tax loss harvesting opportunities in addition to utilizing SPX index options, classified as section 1256 contracts, which are subject to lower 60/40 tax rates. Now lastly, it says the fund utilizes a call option strategy that may include both selling and purchasing SPX index options, which may provide opportunity for upside capture in rising equity markets. Now I say this strategy is very close to perfect, not because necessarily it is close to perfect, but because for me personally, as an investor that wants to earn income, substantial income, but also wants some upside and wants it all tax efficiently, just for me specifically, this ETF seeks out to do all that. Now, as far as distributions go, before I show you the total return of SPYI, the distributions are also very solid. We're talking anywhere from 48 to 50 plus cents per share per month. At least that's what we've seen historically. Now, the cool thing about SPYI is that there's obviously sort of a targeted amount they're trying to pay out on a monthly basis, so you can sort of get an idea on how much you're going to earn for every single share that you buy. Now, this ETF does not offer the biggest yield whatsoever or the most growth whatsoever, but offers the potential for both, and at least since inception has done both very well. I mean, don't take my word for it, look at the numbers. Over the past 2.36 years, SPYI has offered on average, with dividends being reinvested, around 12 or 13% per year, or a total return of almost 33%. Now again, maybe not the best performance across the entire market, but definitely not the worst, and consistent income, which I love. Now, the last S&P 500-ish income style ETF, and I say that because JEPI or the JP Morgan Equity Premium Income ETF doesn't necessarily invest in the constituents of the S&P, but there's lots of similarity there. This ETF has also been one of my favorites. I've held on to JEPI for several years now. And to be fair, JEPI is sort of a consistent low volatility OG in the game. Now, as far as JEPI's strategy, it says seeking consistent premium income with lower volatility. The JP Morgan Equity Premium Income ETF seeks to deliver monthly distributable income and equity exposure with less volatility. The portfolio is as follows. It says defensive equity portfolio employs a time-tested bottom-up fundamental research process with stock selection based on our proprietary risk-adjusted stock rankings. Now, with this discipline option overlay implements right now the money S&P 500 index call options that seek to generate distributable monthly income. Now, even though JEPI doesn't necessarily offer the biggest payouts on a monthly basis and not the biggest yield across the entire market, JEPI has offered consistent income more or less anywhere from 30 cents to 40 cents every single month with low volatility and some growth as far as ETF price. Now, along with that, JEPI is one of the largest as far as assets under management, covered call premium income ETFs across the market, which honestly just sort of helps you sleep well at night. And even though JEPI is not really talked about as much anymore because it's not necessarily the flashiest or the fanciest cover call income style ETF across the market, over the past 4.64 years, JEPI has offered a consistent 12.53% average annual total return, or around 73% total return with dividends being reinvested. Not bad whatsoever, which makes JEPI one of the best options if you want S&P 500-ish exposure. So now that we talked about, went through and analyzed multiple different S&P 500 or S&P 500-ish covered call style ETFs that all offer income, a consistent amount of it either monthly or weekly. I think it's safe to say that there really is an ETF out there for every investor, depending on what strategy you believe in long term and or depending on what you're looking for. Like for example, if you're really hung up on weekly income, well then obviously there's different ETFs out there that are going to pay weekly. Or on the other side of things, if you want to be invested in an ETF that has a massive amount of AUM, well of course something like JEPI is definitely going to offer that. Now for me personally, I like to invest a little bit of money into a lot of different ETFs and stocks and just have a little bit of skin in the game for lots of different assets across the market. So now that we went through all three of those ETFs, I most importantly have a question for you guys down below. If I were to ask you what your number one favorite ETF that we went through in today's video, which one would it be and why? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.